Hello everyone, I am Shripad, your host for today's episode of Here and Now. Welcome to our 169 episode, where we bring to you all the know-how of the ever-evolving insurance world. So let's deep dive into the significant updates and latest news from the insurance industry. The first story of the day from Mint talks about the several period for your critical illness plan. Critical illness policies provide financial assistance during critical illnesses for customers, thus easing the burden on families. In such cases, the insurance company gives us a lump sum payout if the policyholder is diagnosed with a critical illness. Unlike in the case of indemnity-based insurance, which only cover hospital expenses within the coverage limit, the lump sum payout in critical illness policies can be used for any purpose. There are two different ways to insure oneself against critical illness. One is a critical illness rider with a term plan, and another one is a standalone critical illness policy by a health insurer. The first does not require additional paperwork or medical test. However, a rider's premium cannot be more than the base premium of the term insurance plan. Moreover, in many of the critical illness plans, only advanced stages are covered. When it comes to standalone critical illness plan by health insurer, the coverage net is wider and long-term in nature. Generally, insurance companies offer a survival period of 30 days in their policies, and very few insurers offer an option to reduce it. Insurers such as Bajaj Allianz General Insurance charges a 5% loading in a premium to reduce it from 30 days to 15 days, and an additional 5 to 100% to reduce it to 7 and 0 days. Moving on, the story from Business Fortnight emphasizes the insurers utilize claim data to suggest cybersecurity technologies. Businesses using a managed detection and response or MDR provider cut their median response time to a cyber incident by half and saw a dramatic reduction in the impact of each incident. According to analysis of insurance claim data, some cyber insurance firms are exploring offering discounts on policies premiums based on that kind of technology the organization has in its environment. By adding the skilled expertise of cybersecurity professionals to major endpoint detection and response or EDR platforms, companies had favor incident, and what incidents they did have were less serious. According to one of the cyber insurance firm, managed detection and response platform are not alone in being recommended by cyber insurance provider. Insurtech firm with their data focused approach to insurance aim to gather the most accurate information on the effectiveness of cybersecurity products. Shifting gear, the story from Log News discusses insurance policies for cancer treatment by Life Insurance Corporation of India, LIC. Cancer is now controllable with medical advancement. However, treatment costs remain a challenge for many. The Life Insurance Corporation of India, or LIC, addresses this with a cancer cover plan. LIC's cancer cover plan provides 100% treatment coverage with an additional 1% monthly allowance for a decade. If your cancer cover is Rs 30 lakh, then you will get Rs 30,000 per month for the next 10 years. If the patient passes away during treatment, his family continue to receive this monthly income. If the severity of cancer is less, you get 25% of your coverages. If your cover is Rs 30 lakh, then the patient gets Rs 7.5 lakh for treatment. The remaining amount is opt-in when the cancer reaches a risk stage. For Rs 3,000 per year, you get an insurance cover of Rs 25 lakh, meaning you can get a cancer cover policy for just Rs 250 per month. LIC's cancer cover policy covers everything from diagnosis to treatment and monthly income, for which we need to submit a cancer diagnosis report to the LIC office. Wrapping up, the last story of the day from News Leaflets highlights P&C insurance and insurtech trends. The property and casualty, or P&C insurance, and insurtech sector are set for significant change due to technological advancement and emerging global dynamic. The insurance sector is increasingly becoming an advocate of sustainable and ethical business practices. with a focus on enhancing risk modeling and improving transparency in customer communications. Consolidation through merger and acquisitions is expected to reshape the insurtech sector with a focus on proven technologies and strategies partnership. Insurance business model are also undergoing significant changes, including the shifting towards embedded insurance, growth in the managing general agent market, and the expansion of distribution channel. The global economy landscape, marked by a potential recession and geopolitical uncertainties, is prompting insurance to reevaluate their market strategies and adapt to the changing regulatory environment. The adoption of generative AI and integration of digital technologies is critical to remaining competitive and meeting changing insurance market needs. And with that, we wrap up today's episode. We hope you found these news stories informative and insightful. Our podcast Here and Now will continue to bring you more such insurance updates. Until next time, take care, goodbye, have a wonderful weekend ahead.